What's up, investing aliens? Big day today. We had Datadog report this morning, and those cloud SaaS names are ripping today, what I call the tier one stocks. I'm going to give you a quick market update, cover Datadog and some of those favorite cloud SaaS names. Headline, S&P 500 rises for a seventh day on pace for best winning streak of 2023 of the entire year. You can see the Nasdaq's up 0.78%, S&P's up 0.18%, Dow Jones up slightly 0.09%. Now that 10-year Treasury bond we've been talking about was 5%, back at 4.591%. As Treasury yields come lower, risk on, especially when you think of growth stocks, and you're seeing the Nasdaq green. Oil's also down significantly, down almost 4% today. Now this was at $92 not too long ago, at $77.65 today. In crypto, we actually had Bitcoin over 35,000, pull back a little bit, just under 35K. Ethereum, it was over 1,900, now at 1,871. And I'm going to cover Microsoft here, but you can see pretty green day overall, especially in technology. When you look at oil and gas, this is getting hit pretty hard. That's putting some pressure on, the S&P 500. Of course, the QQQ, the Nasdaq 100, the Nasdaq Composite doesn't really have those type of stocks, the oils and industrials. And so you're seeing technology outperform. Now, every single Wednesday, we do what we call Chart Day in Patreon Discord. That's at 9 o'clock a.m. Eastern. It is recorded. Definitely check out patreon.com/Fired Up Wealth if you want to join us. We do live streams every Monday, Wednesday, and Friday at 9 o'clock a.m. Eastern. Now, last Wednesday, every time you see orange is a previous chart day. This is the QQQ, the Nasdaq 100. Last Wednesday, we said needs $368 to confirm upside. On the downside, you've got that 338 to 340. You can see this is a sharp pop here. Basically from 342 up to $372 and change today. So on the upside, the R3 is about $393. And as you recall, I've talked about this a couple times, we need to capture the highs of November of 2021, which was basically $404 on the QQQ. But it's been a wild ride. We were down here at $255 just in October of 2022, about a year ago. And you can see it ripped all the way up to 387, had this correction here recently, 10% from the top, and now it's popping back up. The question is, what does it have? What happens next? A lot of times you see a year-end rally, they call it a Santa Claus rally. It doesn't have to happen. There still are some macro risks. The market's trying to look past that, trying to look past, say, hey, we're not going to have a recession. The Fed's going to start cutting rates next year. We've got an election year and so on. As I've said many times, guys, you can make a bear case or a bull case. As a long-term investor, I don't have to stress about it too much. I buy quality stocks. I generally hold them for 5 or more years, and I'm not worried about 6 months or 12 months. I'm focused on 6 years and 12 years. Check this out. Datadog up over 30% today, trading at about $104 a share. So the market cap is back to about $34 billion. And this stock is up 44% year to date. So it's been one that hasn't participated too much in the rally, now coming on strong here today. And you're seeing the other, what I call tier one cloud related names. So you think of Datadog, that's SaaS, software as a service, built in the cloud for the cloud. Snowflake is more consumption based, but it is in that cloud universe. And both of these stocks are what I would call tier one, as well as CrowdStrike, Zscaler, and a couple others. So you can see Snowflake is up about 10% today. Year to date up 17%. Of course, this has to report earnings yet. According to Fidelity here, Snowflake's going to report November 29th. So definitely keep that in mind. Some other favorites, this is CrowdStrike here, showing November 28th for earnings. And you can see CrowdStrike's up only 2.75%, but it's $191. So if you look at CrowdStrike year to date, it's up 85.82%. And that's based on January 3rd, the start of the year, at $103.28. And you might remember it pulled back from that level just a few days later on January 6th. It was $94.72. So at one point, this stock was under $95, now hovering closer to $200 a share. And this is Zscaler here, also reporting on November 29th. So you have Zscaler and Snowflake both on November 29th, CrowdStrike November 28th. And then MongoDB doesn't report till December 7th. So that's quite a ways out here. And that's up 12.39% today. Now, Cloudflare, ticker net, that did already report. And you can see here Q3 non-GAAP EPS, 16 cents, that beat by 6 cents. Revenue was up 32.2% year over year, and it did beat by a little over $5 million. Free cash flow was $34.9 million, or 10% of revenue, compared to negative $4.6 million, or 2% revenue in the third quarter of 2022. So a significant improvement there. And all of these tier one cloud SaaS names, they have pretty strong balance sheets when you look at cash and cash equivalents. You don't really have to worry too much about a company like Cloudflare. I mean, it has $1.57 billion in cash and cash equivalents as of September 30th, 2023. And the guidance was actually a little bit weak on Cloudflare, but the headline here, Cloudflare surges as investors look past weak guidance. So the forecast for the fourth quarter on Cloudflare between 352 and 353 million, pretty tight window there, and the consensus estimate of 356 million. So not a huge difference, but about $3 million off there. And if you listen to the earnings call for Cloudflare, there were some exciting moments. I think that helped hold the stock up. Here's an example. By the end of 2024, we expect to have inference optimized GPUs running in nearly every location where Cloudflare operates worldwide, within milliseconds of every user. Of course, things like that are very exciting for investors. So let's switch gears to Datadog. Just reported this morning, non-GAAP EPS of 45 cents. That beat by 11 cents. Revenue of $547.54 million. That's up 25.4% year over year, and it did beat by 23.34 million. Strong growth of larger customers with about 3,130 that have $100,000 or more in ARR, that's annual recurring revenue, and that's up from about 2,600 a year ago. So that is significant. Investors are excited about that. And the big thing really was guidance. So Datadog rallies on strong Q3 earnings outlook. And what's interesting on this, at first glance, you'd probably think, well, this is a short squeeze. But going into earnings, the short interest is only about 3.4%. The reality is this stock has kind of been trading in a range for a while. It's like a rubber band. You know, you get it tighter and tighter. Eventually that rubber band breaks and it's got to go one direction or the other. Oftentimes when it coils and consolidates and that rubber band gets tighter and tighter, it'll pop. And sometimes, a lot of times it goes to the upside, especially on any catalyst. Now, something I want to share here on Twitter, there's this poll. Which one misses tomorrow? So the poll, of course, was before earnings. Both Uber and Datadog reported earnings this morning. Which one misses? 63.9%. At one point, it was higher. It was like 75% when I saw it last night. But 63.9% said Datadog was going to miss, and Uber was actually at 36.1%. So more people thought Uber would have a better quarter than Datadog. Now, I don't want to be too cynical or anything like that, but this is one reason I say all the time, you have to be careful with social media, and it really can be trouble for long-term investors. Places like Twitter, there are some good corners of it, but the majority of people on Twitter, number one, are traders, and number two, just really don't have a clue of what they're talking about. I mean, it's always easy in hindsight, but just at quick glance, we know that travel has slowed down. So if you were to look at this and say, you know, which one is going to be more mission critical, you look at businesses and what's focused on enterprise, that's Datadog. We know the consumer has been weaker in some areas, travel slowed down. So to me, I looked at this and said, well, you know, Uber probably has a better chance. I thought there's a chance both could beat, but if one was going to miss out of the two, I would have said Uber, and that was my vote. But just something to point out, guys, just be careful with YouTube, with Twitter, with social media. It's not generally the best place in the world for long-term investors. And there's a lot of noise out there that can really it can impact you to make bad decisions. So if you watch the masterclass videos, I talk about the media and social media is not your friend. And as a long-term investor, investing aliens, it's kind of like oil and water. And you just have to take everything with a grain of salt and be very aware if you are going to dabble in social media. Now, we've created the best investing community on the planet with Patreon, Discord, and our Discord community is focused on long-term investing. It's a combination, but a lot of people in there are focused on growth and a lot of people are focused on early retirement. So not going out and golfing or watching TV all day, but having financial freedom to enjoy the life that you want to have at a younger age than what the normal retirement age is. So if that's something that's interesting to you, check out patreon.com/firedupwealth. We have a 7-day free trial right now. You can check it out. You can go into Discord and see what it's all about. And the idea behind that, guys, it's not about herd mentality. It's about a safe haven where you can share your thoughts and not have all the noise and distractions with people that are focused with an agenda on 6 months and 12 months versus 6 years and 12 years. So it's focused on long-term investing, trying to get better. No spam, no clowns, no trolls. Definitely join us. You will not regret it. One thing I want to point out, Datadog, this is the earnings call. It's the transcript here on Seeking Alpha. Finally, we continue to be excited about the opportunity in generative AI and large language models, LLMs. First, we believe adopting next-gen AI will require the use of cloud and other modern technologies and drive additional growth in cloud workloads. And I agree with this as well. So we're continuing to invest by integrating with more components at every layer of the new AI stack and by developing our own LLM observability products. So this is kind of a pick and shovel play, it's saying, into AI, and that's part of the reason that the stock is up 30%. Not just earnings, not just raised guidance, but a lot of things that were said on the earnings call. This is one that sticks out to me. And while we see signs of AI adoption across large parts of our customer base in the near term, we continue to see AI-related usage manifest itself more accurately with next-gen AI native customers who contributed about 2.5% of our ARR this quarter. That's showing you that only 2.5% of annual recurring revenue. There's a huge path for growth here, a huge runway for growth in this space. So I'm going to look at a chart on Datadog here in a second, kind of just show you where it's at. This is from August investor presentation. Just really quick, I want to go over some highlights. I made this joke about, you think of new investors in 2021. Hey, Datadog, that sounds like a cool stock. I like data. I love dogs. I'm going to buy the stock. I don't know why. I don't know what they do, but I think the stock might go up and it's a cool name. So I'm going to do my best. I've done several videos on the channel. This is one of my favorite stocks. It's a top holding in both portfolios. It's actually the second largest holding in the Fired Up Wealth community portfolio. And I believe it's in the top 12 or 15 stocks in my $1.5 million growth stock portfolio. And I can take the green square away. I don't need that now. All right, Datadog, observability and security platform for cloud applications. All right, what does that mean? Let's dig into it a little bit. So as technology evolves, right, it becomes more complex. And so when you look at really the growth trajectory of a company like Datadog, this company is going to scale as cloud scales. Not only with observability, but adding new products. We just talked about, AI related tools, but also they're getting more into cybersecurity as well. And not that it's a whole new suite for AI. It's just saying that their general tools they already have can be used as we see this acceleration of growth in these secular growth trends we talked about. We talk about these mega trends. So in a nutshell, Datadog solves complexity, and it's showing you here everything from platforms, workflow, deployment, databases, Internet of Things, and so on. Datadog breaks down silos, unified platform, simple but not simplistic, right? So you can use it, but it is complex, deployed everywhere, used by everyone, and it breaks down those silos. We have an employee that's in our community, in our private community. We did a video, I think about a year ago, interview him, and he was talking about the company, and he showed this slide here. And this is showing the history of innovation. So if you go back to 2010, when the company was just getting started, it's really focused on real-time unified data platform. That's that purple in the bottom. But then infrastructure monitoring came in 2012. Now just look, since 2017, they've added application performance monitoring, log management, digital experience monitoring, cloud security platform. And I think that's going to be big. When you think of cybersecurity, this isn't like a true cybersecurity play, but it fits in that arena. And that's what's cool about a Datadog, is it fits in a couple of different silos and it rides a couple different secular trends. And then in 2021, the developer experience. One product, one platform, used by everyone, deployed everywhere. And to piggyback off of that, this is the history of innovation. I won't go through all this. You can certainly pause your screen, but look at that far right in 2023. They're creating more products. And so once it's a sticky type product, you get a customer in, then you get them to, add on more products and modules, right? So you think of the net retention rate, trying to expand that footprint. This is the type of cloud business you want. You want a company that's continuously improving, adding new modules, expanding not only more customer logos, but also the footprints within each existing customer. So I've talked about a lot on the channel. I did a video a while back about how I thought cloud was still in pretty early innings. Although you look at TV, CNBC, and things like that, you'll see people that talk on there talking about how cloud is saturated, it's in late innings. If anything, it's maybe in the middle innings, but it's definitely not in late innings. This is showing you long-term growth drivers still in early stages. So cloud spend continuing to grow rapidly. Look at the cloud spend from 2010 to estimate 2026. That is a huge ramp up. And so you're looking right now at, 2023, there's still a big jump here from 2023 to 2026. And you think about products that weren't as big of a deal. We've been talking about AI, generative AI, enterprises using AI in the future. Now that's starting to come to fruition. What other products, are going to be used where cloud's going to be needed? We talk about semiconductors are the new oil, it really fuels everything. But if you really think about it, you also need, cloud for most things, right? Now, semiconductors are needed for the data centers for cloud, but those two secular trends really fuel a large portion of growth in the economy. Now, with Datadog specifically, we're talking about one niche corner of SaaS, observability, DevOps, in the areas that we've talked about so far. But as we've mentioned on the video, this is very scalable, and it's kind of a pick and shovel play. As cloud grows, it becomes more complex. Companies like Datadog will benefit longer term. This is what Datadog's calling their observability TAM in billions. Now, you have to remember, as they expand more products, that TAM's going to grow. And remember that a TAM, a total addressable market, is not the same as a SAM, or a serviceable addressable market. And this is saying $62 billion in 2026. And keep in mind, the company right now, the market cap is over $30 billion, $33.55 billion. So you have to be aware of that. And this is why you don't want to overpay for these type of stocks. So a leader in the Magic Quadrant 2023, this is application performance monitoring and observability. You can see Datadog here, also Dynatrace, New Relic, Splunk, and so on. And this is the Forrester Wave for artificial intelligence for IT operations. So we're talking about AI, we're talking about cybersecurity, we're talking about cloud, pick and shovel type of a play. You got Dynatrace and Datadog up there at the top right-hand corner as leaders. And I really do think that cloud security can be a big component for them. There's a lot of growth in this area. It breaks down silos between DevOps and security. But I do think there's a lot of opportunity here. So security products, so they're considering observability kind of like security, but security on the right. So infrastructure monitoring goes to cloud security management. Application performance monitoring goes into application security management. Log management, you get the idea. And these are the 19 products right here. And this information is, in August, so before they reported the last earnings. You can see the infrastructure monitoring all the way to data streams monitoring, cloud security management, database monitoring. These are the 19 key products right now, and they continue to expand that and even add modules within those products as well. So the growth drivers for Datadog: secular tailwind of digital transformation and cloud migration, increased penetration of cloud and next-gen DevOps customers, expanding products, use cases for customers. Again, you want to expand the logos, but also the footprint within those logos once you win them, and adding new markets beyond observability that continue to create new products. You can see the compounding annual growth rate, 65%. This goes from FY17 to 2023. And you can see that revenue has kind of started to slow a little bit here, and maybe we'll start to see that accelerate again. The customer growth is solid, and what they need to do is expand within these customers. You can see 5,403 total customers back in 2017. 2022, it grew from 5,400 to 23,200. Now let's look at a chart quick. And I want to say this, Datadog is one of those stocks. It's not a cheap stock. It's an expensive stock. It might not make sense, and it might not be for everybody. I tell a lot of new, especially new investors or more value focused investors, maybe they're a little bit risk adverse. They don't want to take too much risk. Their risk tolerance is low. I tell people to, avoid these stocks because they're, they can be considered speculative because of the valuation. The reason that they're expensive is I still think there's a lot of room for growth in these, and they're going to grow into those. They're hyperscalers, hyper growth, but it might not be for you, and you might not be able to justify the price. So keep that in mind. They're not for everybody. Even though it's one of my favorite stocks, it doesn't mean that, it's something that's going to be a good fit for you. And it doesn't guarantee that it's going to be a winner longer term. Right now, you can see, though, this was an opportunity, of course, back here, like a lot of stocks. We saw the 60s, 61 and 65 back here, basically the beginning of this year. So this in January, you're looking at $61.34 on Datadog. It doubled, like a lot of stocks, literally doubled from 60 to 120 and then pulled back. It was getting all the way down here in the 70s. Actually started buying a little bit more in the community portfolio in this range. And now you can see this huge pop. And this could get faded, guys. There's no question. It's a big run, 30% jump up. You've got this huge gap up, but it could consolidate here too, and it could go higher. This R3 is 110. I said on a recent chart day, it needed something like 108 to have some upside continuation. So you certainly could see the stock back up to $130. I certainly wouldn't chase here. For me, this is a stock, 65. That's generally the area we've recommended. If you go and look at a chart, it was in that range several times. It's kind of come back in those range and then bounced off of that. 75 was the most I'd ever really say to pay for Datadog. So I don't think you should chase here. It's a hold if you own it. Wanted to give you an update with what's going on with the stock, as well as just cloud SaaS names in general. If you're new here, guys, make sure you subscribe to the channel. Click that bell for notifications. Drop me a like, drop me a comment. Have a great rest of your day. Take care.